Right.
Yes, perfect.
Okay, marvellous. So, look, today, as I think I indicated, I'm not going to present a PPP 101 or talk about why PPPs are the answer for all projects. As I mentioned, I think we'll tackle some of the contemporary issues and provide a few points of background and context just to help the discussion along. Some experiences that I've encountered in relation to the projects that I've worked on, and which, looking at some of the attendees today, I think also some of the attendees on this call have actually participated as well. And look, I think the upshot is what's the way forward, and in this current environment, what's the sort of the role that that the market participants, that the infrastructure, that the construction, that the engineering market, and the supply chain that goes on can play. So, look, what I'd take the opportunity to start with just provide a little bit of context about Plenary and what we do as an independent PPP sponsor, developer, and investor. What that does, it gives us a bit of a unique perspective, given that we cover different geographies, different jurisdictions, work with different contractors, and cover a range of different infrastructure classes. And you can sort of see, our focus is predominantly the eastern seaboard, because that's where the majority of the projects have occurred in Australia. Over the sort of the 15 years at Plenary, and that has certainly contributed to the extent of grey hair at the moment. Well, I've been pretty fortunate to see the portfolio really increase, the scale and complexity of the projects increase, and the cycles in which the infrastructure market has experienced. And one of the trends that we've seen is, and I'm sure many in the civil engineering industry have really seen, is a bit of a shift from the social infrastructure market to some of the very large civil projects, and we're starting to see a bit of a move back to the social infrastructure projects, partially in response to some of the challenges that are being faced on those projects at the moment. I guess one of the characteristics that's defined where Plenary as an organisation has participated and has really set up shop, it's relied on a couple of characteristics: stable governments and certainty of process. The procurement process that underpins the PPP type projects has been really important. And that certainty of outcome, the track record of successfully delivering PPP projects from a government perspective is really important, and has actually been a contributor to the success of the organisation. But importantly, the nature and the type of the projects that we've been involved in. So we started in Melbourne and Sydney, and have grown from there, moving and establishing in Canada. Given the very similar government and policy framework, and recently we're really seeing a lot of growth in the US. This provides a bit of an overview of Plenary's Australian projects, and as I mentioned, many of you will be familiar with some of those. I'll talk about a few of those tonight as we run through. But in New South Wales, and obviously Sydney Metro is one of the large ones that obviously has a very material civil component that I'll talk about a little bit in a bit more detail. So, for the purposes of just, I guess, a bit of context. The PPP project is fundamentally about outcomes. It's outcomes in relation to the finished project. It's about assured time and cost outcomes. It's about service performance with a governance structure that provides accountability. And risk transfer is a factor in all of that, but it's not the means to the end. And I'm sure many of you have heard sort of debate in the industry about, you know, the suitability and the nature of risk transfer in PPP projects. And I'll come to that in a little bit more detail. But fundamentally, you know, from a plenary perspective, we don't see risk transfer as an outcome or as a requirement of PPPs. It's a consideration, and it comes down to this question about value for money. In the context of these major infrastructure projects, this risk allocation is a real opportunity and a really important part where the engineering profession and the expertise that they bring can really help provide a bit of an informed discussion about those. Couple of photos here: Sydney Metro on the top, and the driverless trains, the rolling stock there that operate on that piece of infrastructure. And then down below, we have the sort of an aerial shot from the Western Roads upgrade, which is a brownfield site, which I'll talk about in a little bit more detail. When we consider value for money, you know, this is from the government's perspective, and you know, the evidence shows, and we look at the performance of projects as they're procured, it does show that there's a really good track record of performance against the PSC. And the PSC is the public sector comparator. That's something that governments calculate to, I guess, help assess their, or help their assessment of bids and determine whether they're getting a good deal or not. It used to be a threshold, so governments preserved the option to self-procure in the event that the private sector came in above the PSC, but now it's used more as a bit of a gauge as to where the bids are sitting. But I think one of the really beneficial outcomes of PPPs is this whole of life approach, and that's one of the ways in which this value for money outcome is achieved. And that is by taking account of maintenance and life cycle costs, energy, operating costs, all of those things founded in a sensible and disciplined sort of engineering approach. But the difference is that within a PPP, given that it is essentially a concession over an operating term, it gives the private sector a bit of a different drive and a different ability to actually trade off those different elements of the cost component. One of the other features and benefits of PPPs, and this is certainly something that is recognised and I think valued by governments undertaking these sort of projects, is the innovation outcomes. And this is a bit of an example from Sydney Metro Northwest, and what it shows was the original media release that came out back in 2012. Where the reference design was talking about 8 car sets with a 5-minute headway. And because the private sector, through the procurement process, was able to trade off the capital cost of the rolling stock, the infrastructure requirements, the size of the cars, and the operating costs, the optimal outcome actually delivered a better customer service result by providing, you know, a more frequent service, turn up and go service, and a better value for money outcome as well. So that's a great example. Another one that came through in our Toowoomba Second Range Crossing project is the countless options were explored in the design and refinement of the alignment for that project. And in doing so, they were actually able to come up with a design that avoided the need for a tunnel. And so you can just imagine the cost, the technical complexity, but importantly, and one of the real benefits for the government and for the roads authority there was that it provided a solution that was accessible for every class of transport. It didn't mean that heavy vehicles transporting explosives or certain classes of chemical needed to find alternative routes. So, you know, those innovation options are really important. I would like to touch on, and I guess another attribute of of PPP projects is that ultimately these projects are delivered for the benefit of users. You know, these are infrastructure projects that are used by people. And, you know, whether it be a hospital, whether it be a transport network, light rail systems, schools, convention centres, or whatever, they're all used by people work there. People make use of them, people visit and study, receive treatment, whatever it might be. And in practical terms, we spend a lot of time talking about the delivery phase of these infrastructure and PPP projects, and often ignore the fact that the delivery phase is a fraction of the overall duration of the operating concession. And fundamentally, it's even a smaller part of the economic life of that asset. So this is a report here that that was actually undertaken in partnership with the University of Melbourne, supporting the session this evening, and infrastructure partnerships, and what it was serving to do, and this particular aspect related to social infrastructure, was to go out and actually survey the users and the parties involved in the operation of these facilities. And look, you know, I think in many, you know, across the board, it's shown an overwhelming preference for people working and operating within a PPP facility. And I can draw on some of my own experiences as a bit of a validation for that. I was the project co-representative for Casey Hospital out in Berwick, and having started my career very early on as a hospital engineer, looking after old coal-fired boilers and so forth in a very.
What are you doing, you stupid cunt?
An aging hospital, you know, the contrast is quite dramatic when you actually have the performance requirements and the funding to actually ensure that the assets are maintained, you know, to the required standard and in compliance with, you know, the various regulations. What it means is that staff don't need to worry about it, and you know, they don't spend their time chasing around trying to get things repaired. The facilities are looked after really well, and that generates a degree of pride, and they operate as they should. So people don't waste their time, you know, sort of trying to work around equipment and services and elements of the infrastructure that don't work as well. And so, you know, without going through all of the findings, I think, you know, it does provide a bit of a different perspective and a different view, and perhaps a reason for a greater focus on, you know, the service delivery and the operational outcomes of these pieces of infrastructure. A few comments there from some of the schools, and as I said, you know, it does take quite a bit of time in traditional projects, and like I say, having lived it firsthand, to keep some of these facilities operating, taking people away from their day job, and as mentioned, maintaining things in a good standard actually engenders a degree of pride and actually causes less problems. But these aren't limited to social. These principles aren't limited to social infrastructure. We've also looked, and this is just some information from Sydney Metro Northwest, and this is just picking up some of the customer experience and satisfaction levels from that project. And you can see that you know, it's certainly performing better than the rest of the network. And look, a very easy response is to say, but it's brand new and all whiz bang and so forth. But you know, I think what we've certainly seen is that you know, the things like cleanliness, graffiti removal, the station environment and so forth, availability and performance of vertical transportation all contributes to that, and they're universal universal parameters regardless of the age of the infrastructure. We see similar results on our project in Gold Coast Light Rail, where I remember when it was originally being built and bid, and there was a lot of objection and opposition to the project. It really the impressions started to turn when property developers along the Gold Coast started putting the light rail on their renders for their new buildings, and now it's going through its third stage of expansion and is a really intrinsic part of the Gold Coast transport network. One of the other things, and I guess attributes and aspects that we've certainly had to deal with in PPPs and infrastructure projects generally, is the capacity for flexibility and expansion. And as projects mature, expansion becomes really important and a technically challenging requirement as well. We know that interfaces are really difficult to manage, and working within a brownfields environment, particularly if we talk about a rail environment, is really tough. So, you know, our experience, and while there's often been sort of criticism about PPPs for being very inflexible, that certainly doesn't accord with the research undertaken by University of Melbourne. But we've been pretty successful in undertaking a number of augmentations and expansions of existing and operating PPP projects. The first one I want to talk about is the Sydney Metro City and Southwest expansion, and this one is interesting for a couple of reasons. One is that it was commenced prior to the completion of the Northwest leg, which is the section identified as being under construction, and it was assuming or taking over or converting the existing Bankstown line, which you know, which is a pretty old section of rail, and converting that to the new Metro standard. And so, look, you know, quite a bit involved in all of that, particularly in the context of operating within a live rail environment, but also navigating the different procurement methods and packaging in partnership with Transport for New South Wales. So, you know, with that, you know, there were I think 15 different packages relating to different elements of the project that was stitched together and essentially brought together in under a consolidated operating model for both elements of that network. So a pretty complicated augmentation that was successfully delivered, involved raising, you know, quite an amount of debt, you know, with a couple of other augmentation projects that we've been through, which all have some different characteristics. Casey Hospital, as I mentioned in the top left, you know, this is relatively recently completed, fortunately in time for the whole COVID sort of increases in demand seen out in that Berwick corridor there, and that involved you know, a new ICU, which has been pressed into service, some additional operating theatres, more car parking space, and so forth. And that was done within the context of, I think it was about a 15-year-old hospital, and that's been a great addition. For those that have been out to the convention centre, and this was one that I led and delivered, was the exhibition centre expansion, and interestingly, the at-grade car park there was contemplated for future expansion of the exhibition centre. But in order to make that work, it required quite a deal of fancy footwork and commercial structuring to deal with the different stakeholders in the precinct. And what it involved, what that project ended up involving was it was roughly a $300 million expansion to the exhibition centre, a multi-deck car park with a hotel built on top of it. So lots of different parties and a lot of construction coordination, and some, given that was a deck sitting above retail below, some pretty careful engineering and structural assessment to make sure that all worked as it should have. The other one of note that's in progress at the moment, off the back of a successful stage 2, is Gold Coast, which I touched on before. So that's running out, I think, about halfway to the airport, and that's under procurement at the moment. The other sort of emerging model in PPPs that we're seeing is brownfields related projects, and the suburban roads upgrade, or the Western Roads upgrade, which is where this image is from, is a great example of that. And what that involves is a bit of a mix of assuming from day one underlying maintenance and life cycle obligations, but also solving some of the capacity and operational issues, or traffic flow capacity issues through capital works. And so that's been I think it's under construction at the moment. It's been a relatively challenging project, I think, on a few fronts, but it's actually progressing really well at the moment now. And I think one of the benefits of construction being regarded as an essential industry, and perhaps a little less traffic on the roads at the moment, means that they're making a bit of progress on that job at the moment. I thought, and maybe consistent with the overall theme of the session tonight, I'd like to sort of share, I guess, a few observations and a few thoughts about the infrastructure market generally, and sort of what the prevailing issues are, and where sort of PPPs and related procurement models might fit. And I guess it certainly wouldn't be a contemporary webinar at the moment if it didn't touch on COVID. But look, in this case, I'll sort of try to take a bit of a different tack to just the usual story about what's going on with that. But I think if we take the financial markets in the first instance, it's absolutely a global issue, and it is definitely having an impact on financial markets. But it's a very different effect to what we saw in the GFC. In the case of the GFC, that was triggered by really a distortion of the financial markets risk appetite, and that was really centred on the US housing market, and what that led to is insolvencies and bailouts, which really shook the confidence in the financial sector, and questioned and prompted financial institutions to question the credit worthiness of their counterparties. In this case, though, it's an external or an exogenous influence, and like so many other businesses, the financial markets really remain open. But there is a great deal of conservatism and sensitivity to volatility or uncertainty that's really reducing that's leading to some reduced commitment terms and probably some more conservative financing positions. We're going through and engaging with banks' credit departments at the moment, and the absolute steer from the deal teams is just keep it really simple. Don't present anything new or different, and just give it some, keep it to things that they can easily analyse and deal with. But having said that, and we're certainly seeing banks and other financial institutions continuing to be open for business, continuing to lend, and displaying a great deal of appetite for these infrastructure projects. And that same principle applies to equity investors and alternative instrument providers as well. When we think about contractors, and I'm sure as many of you are seeing in your workplaces and in your businesses, the physical distancing and workplace restrictions are definitely having an impact on productivity and the performance in the contracting market and the supply chain. And that's applying to construction, to services, to infrastructure delivery, as well as the professional services that we're involved in as well. I think with the effluxion of time, people have sort of worked their way through it and are progressively getting back to a slightly better sense. But for those, working on site, and I think fortunately that, construction's been maintained as an essential service, and the contractors have really jumped on any cases really quickly. What that's meant is that, work has continued to progress, albeit at a reduced rate. And that's definitely cost those contractors financially. And, it'll be pretty interesting to see what happens when we get to completion and things like liquidated damages and other costs start to bubble up. But I think, definitely, and through our engagement with the contracting market, they've been really, I think, quite active in making sure that their supply chain is supported, and that, the discussion, the engagement, and the interaction with principals and other participants in the market, and of course government, has really been continuing, so that that major level of employment, or major source of employment and demand is maintained, so that when things really open up in earnest, that capacity is maintained. In terms of government and those projects that are in the market at the moment, we've definitely seen some impacts, and those impacts have ranged from like we are today, everyone interacting via MS Teams or Zoom or the Cisco equivalent. In some cases, procurement processes have been suspended, and everyone's sort of down pens for a period of time. And in certain cases, there's actually been projects that have been cancelled. And certainly, in the case of those, certainly prefer not to see that. And as we were involved in one of those, it's definitely not something that we're particularly keen to see. But notwithstanding, we move on and look ahead. I think when we see what the direct effect of COVID on contractors' ability to price and parties to bid is definitely a bit of a live issue. And at the moment, what we're seeing is parties really just not being able to fully quantify what the effects of delivering a project, undertaking design construction, what the implications of that are at the moment. So really the baseline at the moment is assume that we're not in there's no COVID restrictions, there's no pandemic directions or anything else, and it becomes a state risk. I think there's a bit of water to flow under this bridge still, because at the end of the day, we're going to need to get to a point where, as contracts reach contractual close and financial close, that there'll need to be some sort of certainty or assurance around all of that. But look, I'm expecting that to settle down as the routines, as the working practices, and as the approach in this environment really starts to settle. So, look, what does all that mean? I think, realistically, and we're seeing it, and I'll touch on it in a little bit more detail. It's about confidence, it's about certainty, and it's about a pipeline of projects that's needed for the entire market. And that's not just PPPs; it's government work and infrastructure and development more generally. I think, as noted in that second bullet point, there is a real opportunity, and it's important to make use of public and private sector capital to deliver this infrastructure. It generates a different dynamic and a different discipline for projects to be undertaken in a PPP context, as well as those that are delivered via an alliance or just a straight D&C. And I think the final bullet is probably the important one. And again, I think this is one where the engineering industry can really contribute to the dialogue on this point. And that is that, I think the last thing everyone wants to see is just projects done to, for the sake of it, to respond and provide that immediate fiscal policy, fiscal stimulus. I think our preference, and certainly from an economics perspective, really bringing those projects that have the justification, have the economic and social business case to market and package them in a way that makes sense for the industry is really the best approach. And we really commend sort of the infrastructure bodies, the I bodies that are ranging from Infrastructure Australia all the way through, for the work that they've done in identifying and prioritising those pipelines. It's going to be a matter of just seeing how they're brought to market and how they're ultimately delivered. We've all seen the announcements, we've all seen the reports, and which is great to see. But we're sort of in slightly uncharted territory at the moment, and I think having the pipeline, having the initiatives is really important and really beneficial, and helps provide that sense of certainty and confidence for business. But as you can see here, and this is a chart that I borrowed from Infrastructure Partnerships here, and what this shows is the budgeted allocation in the Eastern Seaboard, state governments for infrastructure expenditure. And you can see in beyond 2021, it's actually on the decline, and that's representing the runoff of a number of the major infrastructure projects that are in delivery at the moment. Now, if we look at the stimulus that's being touted, and I think everyone agrees is very necessary, we'll expect to see as the budgeting process continues and works its way through government, that forecast will turn around, and hopefully there'll be some really good, quick, impactful projects that make their presence known. I guess one of the other contemporary issues that we're hearing a lot about, and I'm sure those on the call are certainly aware of and are involved in as well, is sort of where things are heading with risk allocation. And I think in the COVID sort of environment, that's becoming writ large as well. I think it's safe to say there's the discussion about the valuation of treatment and risk, both from a government side and from a contractor side, has been ongoing. And I think there will continue to be, I think, a pretty hefty dialogue about risk and risk allocation, over the foreseeable future. From my own perspective and my own observations, there's been a couple of areas where this has been really challenging, and where that assessment, valuation, and treatment of risk has been quite contentious. And in many cases, those have actually had some pretty material financial impacts on some of those contracting parties. And a couple of headlines there that have come out of some of the press in recent times. But to my mind, I think they can be sort of distilled down to sort of four categories. There's the external interfaces and approval bodies, and particularly where those entities have an involvement in the design development process. And you know, the inability of, or the difficulty sometimes in navigating through that design development process, getting the necessary approvals to proceed, has had absolute time and cost impacts. We're all aware of and familiar with the challenges associated with utilities and utilities relocation. We need only refer to Sydney Light Rail as an absolute example of the difficulties involved in delivering a light rail project in a city environment. Site conditions, you know, the level of information, the certainty and reliance that goes along with that. You know, you can guarantee the information that is released by the state in relation to the site conditions might be old, it might not be complete, it certainly won't have boreholes where you need them, and so that's one of the challenges that we all face when bidding and delivering these projects, that can have material cost impacts. And the final point, and I think you know, this one becomes and I'll come back to this one in a couple of minutes, is cost escalation. And you know, particularly for those inputs where there's high demand across the country, concrete, steel, and so forth. And it's a bit of an open question, but you know, is this primarily focused on civil projects? And you know, there's certain characteristics of civil projects where those risks that I mentioned before actually have a much more significant impact. You know, in the case of utilities risk, as mentioned, you know, Sydney Light Rail, constructing a light rail track through the centre of the CBD is a pretty significant undertaking, but that risk equally applies to Canberra Metro and Gold Coast Light Rail. In each case, the intensity is slightly different, but the manifestation and the nature of the risk is the same. You know, in each case, there's slightly different ways that was treated. In each case, you know, significantly different results on for the government and for the contractor. I think the common element through all of that is that you know, there has been an objective for transferring risk, and in many respects limiting the capacity within the project to actually deal with those risks, and that, you know, that can take a number of forms. It can be, you know, things like program contingency, risk sharing regimes, shared engagement obligations, and so forth. And I think that's a bit of a trend that we're starting to see governments being a bit more open to, and having the awareness that a very universal or blanket risk allocation or risk transfer isn't necessarily in the best interests of all the parties involved in the project. I think, as I said before, you know, time will tell as to how this will manifest. But I think this is a real opportunity where the engineering profession can contribute to that discussion and that debate by really bringing the engineering and technical discipline to consider the nature of those risks and how they might be best be managed or mitigated. But overall, I think there's some encouraging signs that governments are starting to reconsider their approach and really take a bit of a different view as to what value for money actually constitutes. I've borrowed this slide from CIMIC's half-year results from last year, and I'm sure it's one that everyone has seen in one degree or another. I'm not going to go into the detail, but really use it as a bit of an illustration of one of the points I touched on previously, and that is the manifestation of one of the expected risks. And you know, when we look at project costs, you can see here this is the producer price index over the last 4 years, and ABS very specifically split out the difference between social and economic infrastructure, and you can actually see how the PPI for the economic infrastructure have outstripped those that relate to social infrastructure. And if I jump back to the previous slide, that coincides pretty closely with that absolute civil infrastructure, major transport infrastructure project peak. So it's a little bit of we sit back and we're surprised, but one of the measures that we're starting to see is that there is a bit of a different appetite for risk allocation on some of these points, and some of the major civil projects that are in procurement at the moment are taking a pretty close look at this. For things like steel, concrete, and some of those major inputs that are subject to that quite significant pricing volatility and variation. Okay. So, look, I wanted to maybe just finish on this one, and conscious of time, and I think we're tracking okay. But I've touched on and tried to identify, I guess, a couple of areas. But from as a sponsor and as a developer of these projects, we really see a really important and a major role for engineering expertise in these projects. We've shared great success with our partners through engineering innovation, coming up and delivering really good ideas on these projects that takes out cost, takes out risk, or delivers a better user or whole of life outcome. And whether as engineers we're working on the state side in developing the reference design or the concept of the project, whether we're involved in the procurement of it or in the delivery of it, bringing that engineering discipline, providing the capacity, the innovation, the design management, and those specialist tools that we have at our fingertips, really provides a strong contribution. But I think importantly, it actually helps inform that discussion about risk and value. And at the end of the day, those are really the key outcomes that are on the forefront of some of the discussion about PPP projects at the moment. So look, with that, and I think, Stephen, hopefully I've hit the time. Happy to take any questions and address any comments that might come up.